Ever wonder that choosing the wrong AI stock could wipe out your investment? It's a common fear, but there's a strategic way to invest without the guesswork. AI ETFs let you bet on the entire AI sector, reducing the risk associated with individual stocks. In this video, I'll show you and John the 3 best AI ETFs for a $100,000 investment, showing you how to balance risk and reward in the rapidly growing world of artificial intelligence. I'll also show you the potential of each AI ETF to convert a $100,000 investment over 10 years. In the end, I'll show you an AI ETF that has the potential to turn this $100,000 investment into an over $20 million portfolio that pays over $100,000 in annual dividends. Alright, now that we've set the stage, let's dive into the basics. First off, what exactly are ETFs and AI ETFs? ETFs, or exchange-traded funds, are essentially a basket of securities that you can buy or sell through a brokerage firm or a stock exchange, just like you would with a regular stock. These baskets can include a mix of various assets like stocks, bonds, or commodities, and they offer investors a way to diversify their portfolios without having to pick individual stocks. Imagine them as a smoothie blend of different fruits offering a variety of flavors all in one sip. Now, AI ETFs, as the name suggests, are ETFs that focus specifically on companies involved in artificial intelligence. This includes companies that develop AI technologies, provide AI services, or heavily integrate AI into their business operations. Investing in AI ETFs comes with several benefits. The AI industry is booming and has immense growth potential. You get exposure to a broad spectrum of companies leading the AI revolution, from big tech giants to innovative startups. Another significant advantage is diversification. By spreading your investment across multiple companies in the AI sector, you're not putting all your money into one company. This helps mitigate risks, because if one company doesn't perform well, others in the ETF might still do great, balancing out the overall performance. For this video, the best AI ETFs were chosen for their efficient expense ratios, net asset values, and portfolio diversity. Specifically, they meet these qualifications: expense ratio no larger than 0.2%, net assets greater than $250 million, at least 70 different stocks in the portfolio. So let's take a look. Starting at number 3, we have the iShares US Tech Independence-Focused ETF, known by the ticker symbol IETC. This ETF has shown impressive performance since its inception on March 21, 2018. With a focus on companies at the forefront of technology and independence, the ETF has an expense ratio of 0.18% and currently manages assets worth $272.92 million. Over the past year, IETC has returned 29.57%, outpacing many traditional investment options. Historically, the ETF has averaged a share price appreciation of 17.25% each year. IETC is deeply connected to the AI revolution. The ETF invests in companies that are heavily involved in AI development and application. These companies are leaders in integrating AI into their business models, thereby enhancing efficiency, creating new products, and opening new market opportunities. By focusing on technological independence, IETC ensures that its holdings are not only users of AI, but also pioneers in AI technology. AI technologies such as machine learning, natural language processing, and robotics are central to the operations of IETC's top holdings. These companies are not just adopting AI, but they're setting the pace for the entire industry. This strategic focus positions IETC to benefit from the ongoing advancements and widespread adoption of AI technologies across various sectors. The top holdings in IETC reflect its strategic focus on technological independence and innovation. The ETF includes industry giants such as Microsoft, renowned for its advancements in AI, cloud computing, and machine learning technologies. Amazon is another major holding, leading the way in AI with its AWS services and AI-driven logistics. Broadcom contributes significantly to AI hardware and software solutions, while NVIDIA is essential for AI hardware with its powerful GPUs and ongoing AI research. Salesforce leverages AI in customer relationship management, known as CRM, and business analytics. These companies are at the cutting edge of AI, making IETC a solid investment for those looking to capitalize on AI advancements. That's why this ETF stands to benefit immensely from AI as the technology continues to evolve and integrate into various sectors. The ETF's focus on companies that are at the forefront of AI development ensures it captures the growth and innovation driven by artificial intelligence. As these companies continue to innovate and expand their AI capabilities, IETC's value is likely to increase correspondingly. The AI-driven advancements in sectors such as cloud computing, data analytics, automation, and cybersecurity will contribute to the growth of the companies within ITC, thereby boosting the ETF's overall performance. Some examples: the adoption of AI in healthcare for diagnostics, in finance for fraud detection, and in manufacturing for predictive maintenance. These will all drive significant revenue growth for these tech giants. But how much can it return on a $100,000 investment? With a current dividend yield of 0.63%, dividend growth of 6.48%, and an average share price appreciation of 17.25% since inception, the potential returns are substantial. After 1 year, your investment could grow to $117,880. After 10 years, it could reach $507,967. In 20 years, the investment might be worth $2,521,595, and in 30 years, the value could soar to $12,425,446. The total value added over 30 years would be $12,325,446, with $12,284,631 from capital appreciation and $40,815 from dividend reinvestment. Next, at number 2, we have the Vanguard Information Technology ETF, known by the ticker symbol VGT. This ETF has been a staple for investors looking to gain exposure to the technology sector since its inception on January 26, 2004. This ETF is known for its robust performance and low expense ratio of 0.1%, managing assets worth a staggering $87.56 billion. It's delivered strong returns over the years, reflecting the growth and innovation in the technology sector. Over the past year, VGT has returned 23.02%. Historically, it has averaged a share price appreciation of 18.87% annually, making it an attractive option for long-term investors. Now, in the end, I will show you an AI ETF that beats this and has the potential to turn a $100,000 investment into an over $20 million portfolio that pays over $100,000 in annual dividends. But back to VGT. Its relationship with AI is significant. Like our last ETF, VGT invests heavily in companies that are at the forefront of AI technology, integrating it into their operations and product offerings. These companies leverage AI to drive efficiency, develop new products, and gain competitive advantages. By focusing on the broader technology sector, VGT ensures diversified exposure to AI through its holdings in companies that are not only users, but also innovators of AI technology. The companies within VGT are deeply embedded in various aspects of AI, from machine learning and data analytics to robotics and automation, making the ETF a prime vehicle for capturing the growth driven by AI advancements. The top 5 holdings in VGT reflect its strong focus on technology and AI. They include Microsoft, Apple, NVIDIA, Broadcom, and Advanced Micro Devices. What makes VGT a compelling AI ETF is its combination of exposure to leading technology companies backed by huge assets under management, with a strong emphasis on AI. This diversification reduces the risk associated with investing in individual stocks while maximizing potential returns. Let's look at the future projections for a $100,000 investment in VGT. With a current dividend yield of 0.66%, dividend growth of 14.63%, and an average share price appreciation of 18.87%, the potential returns are extremely favorable. After 1 year, your investment could grow to $119,530. After 10 years, it could reach $589,755. In 20 years, the investment might be worth $3,422,475. And in 30 years, the value could soar to $19,654,472, with dividends adding $31,016, providing monthly dividends of $2,585. The total value added over 30 years would be $19,554,472, with $19,307,985 from capital appreciation and $246,487 from dividend reinvestment. And finally, topping our list at number 1, we have Fidelity MSCI Information Technology Index ETF, known by the ticker symbol FTEC. This ETF is one of the most formidable players in the world of technology ETFs. Since its inception on October 21, 2013, FTEC has provided investors with access to a diversified portfolio of technology companies. With an expense ratio of 0.08%, one of the lowest in the industry, FTEC manages assets worth $11.35 billion. Over the past year, FTEC has returned 23.77%, and historically, it has averaged a share price appreciation of 18.72% annually. FTEC is strongly linked to AI through its investment in companies that are both users and developers of AI technology. The ETF includes firms that use AI to enhance their operational efficiency, develop innovative products, and provide advanced services. These companies are leaders in various AI applications, such as natural language processing, predictive analytics, and intelligent automation. FTEC's holdings are involved in pushing the boundaries of AI, from creating AI-driven software solutions to developing the hardware that powers AI systems. The top holdings in FTEC are more or less similar to the other ETFs, with Apple, Microsoft, NVIDIA, Broadcom, and Salesforce taking the top 5 spots. But it also has some dividend-paying options in its holdings. This diversification reduces the risk associated with investing in individual stocks while maximizing potential returns. Additionally, FTEC's low expense ratio enhances its attractiveness as a cost-effective option for investors seeking exposure to the AI sector. The fund's management has consistently shown an ability to select high-performing stocks, which is evident from its impressive annual returns. As for future projections, the ETF has a current dividend yield of 0.68%, dividend growth of 19.08%, and an average share price appreciation of 18.72%. Again, the potential returns are substantial. After 1 year, your investment could grow to $119,400. After 10 years, it could reach $589,451. In 20 years, the investment might be worth $3,481,891. And in 30 years, the value could soar to $20,612,735, with dividends adding $130,205, providing monthly dividends of $10,850. The total value added over 30 years would be $20,512,735, with $19,731,294 from capital appreciation and $781,441 from dividend reinvestment. Now, for many, $100,000 might simply be too much capital for an initial investment. Want to know a step-by-step guide on how to build a portfolio that pays over $3,000 in monthly dividends with just a $100 monthly contribution? Click the video on the screen to find out.